You've just heard rumors saying there might be interest rate cuts coming soon. It could be that you're planning to buy a property or already have existing ones. It doesn't really matter. What matters is interest rate cuts play a very big role in the direction of your investments. As a matter of fact, in the last 4 months, we've seen all the big 3 banks dropping their rates. CBA, ANZ, NAB, and now Macquarie Bank as well. What does this really mean? Will there be more interest rate cuts coming soon from them? And what should I do with my own investments? What if I'm only starting to buy right now? Now those are really good questions. So therefore in this video, I will reveal what the big banks are doing. I'll then discuss where interest rates might be in the next 12 to 24 months. And lastly, I'll uncover what it means for us investors. Now before we start, if you guys would like all insights about real estate cycles, properties, stocks, or even crypto, make sure you subscribe to my newsletter down in the description down below. It's all free and you got a lot of sauce from it, so check it out. Alright, let's get started with what the big banks are doing right now. So with the most recent news, we know that the RBA is supposed to meet in February 17 to 18. And during this meeting, we have many economists from big banks like ANZ and NAB and Westpac all predicting of an interest rate cuts, the first time in 18 months. And not only that, recently Macquarie Bank reduced their fixed rate down to 5.55%, a drop of 14 basis points or 0.14%. Now this might not sound like a lot, but it's a very important point. It's the start of many interest rate cuts as predicted by the 18.6-year real estate cycle. So you might ask, what is the 18.6-year real estate cycles? Well, it's one that has predicted all the past crashes in the last 30 years. So the 1999 internet bubble, 2008 GFC, and most recently, 2020 COVID crash. It's based off the Banner cycle, which has predicted the last 200 years of economic crashes. And with the 18.6-year cycle, predictions have been made about interest rate cuts during the mania phase which we are in right now. Similar event has been supported by Ray Dalio, the world's largest hedge fund founders, and he has made studies about the big debt cycle as well. So it's really amazing and very interesting to see what they have talked about coming to life with the interest rate cuts coming. Specifically, we've seen fixed rate cuts from all 3 big banks. So ANZ cutting their rates by 0.15% down to 6.39%, CBA dropping their rates by 0.15% in August, and NAB a week ago by 0.40%. Now the fact that the big banks are all reducing their fixed rates only means one thing. They are predicting the RBA to lower their rates in February, since fixed rates tend to indicate what the big banks are thinking about the future interest rates. Lowering of the fixed rates means that they predict the RBA to cut rate and vice versa. As a matter of fact, they are just making a bet with you, the borrower. And they of course want to win and make money. So if you are taking their fixed rates of their home loans, it means you think that the rates will increase, so you want to lock in a lower rate right now. Now banks, on the other hand, think the opposite. They think rates will be lower, so they want you to lock in a higher rate right now. And this is being confirmed by more and more facts. For example, right now, smaller lenders are cutting rates too. Australian Unity, now 6.03%, dropping 15 basis points or 0.15%. GNC Mutual, 5.5%, dropping 0.25%. Lastly, Queensland Country Bank, 5.89%, dropping 0.2%. With this, we now have some confidence in the direction of interest rates. The next important question is, where will interest rates be in the next 12 to 24 months? Firstly, let's start with some expert predictions. Economists from CBA believe that the RBA will lower the interest rates by 1% in 2025. Additionally, when you look at the RBA rate tracker, which shows market sentiments and expectations of interest rate cuts, it's now showing there's a 78% chance that interest rate cuts will happen. And that's a pretty high chance. And despite this being a lagging indicator, it is a good one to confirm market sentiment and your own hypothesis. Now, what does the real estate cycle talk about interest rate cuts? Well, as I mentioned before, in the 2 years leading up to the peak, which we are in right now according to the cycle, is called the mania phase, interest rates will drop and remain quite low. And in the very last 8 to 10 months right before the peak, the rates will be hiked and increased according to the cycle. Around 2026 to 2027 is when we might start to see this rate hike. So what does this all mean for us investors? Well, that's one complex question to uncover. So let's divide investors into two types: existing property investors and new property investors. For existing property investors, a decrease in interest rates means an increase in property value and a lower mortgage repayment. For new property investors, on the other hand, if you do get into the market quite early, so ideally before the RBA even announces the interest rate drops, or mostly within 3 months after, you can probably get a property at a low premium to the price or lower mortgage repayments. However, if you do get in too late, it might now be too expensive, and since property's value have gone up, even if interest rates are lower, the higher property value will cancel out the lower interest rates cost savings, and your mortgage repayments might be even the same or even higher. And lastly, once the rates eventually get hiked in the future, it might be a good time to reduce your investment exposure or at least reduce your debt position, so when the rates get higher, your repayments won't be too high or affect your financial position. Well, there you have it. Do let me know what you think of this issue down in the comment section below, and if you want to see further insights about the market of real estate, crypto, stock, and the cycle, make sure you subscribe because I will be revealing the rest of my findings very soon. Also, I do know that I've mentioned the cycle multiple times, but the truth is, everything I've mentioned to you is completely useless. Because if you don't truly understand the timing and the reasons behind the cycle, everything I've told you will not work. So watch this video next to solve them.